What does this final Q1 GDP data mean for the UK outlook? I mean, it was as expected. We knew that things had been pretty stagnant in the first quarter.
Yeah, we knew it had been anemic growth, and now it's confirmed. It's anemic growth. No revision, 0.1%. Perhaps more interesting is the line that real disposable income fell 0.8% in the first quarter. That's after growth of 1.3% in the fourth quarter. So it reflects this squeeze on household budgets in this cost of living crisis. In terms of the outlook ahead, this week we've had warnings from Bloomberg Economics, from Schroders as well, that a recession is in the pipeline for the UK economy because, of course, we had that jumbo hike from the Bank of England last week. More are expected by not just markets but economists as well. And you've got government support waning now. But despite all that, business confidence in the latest Lloyd's Business Barometer is actually at a 13-month high. And it was conducted between the 12th and the 13th rate hikes from the BOE. Maybe the 13th is going to have a bit of a dent, but it's a worry for the Bank of England because the flip side of that resilience is, of course, raging inflation. But someone who isn't concerned is Silvana Tenreiro, the outgoing dove on the Bank of England's Monetary Policy Committee. She reiterated yesterday that all these previous hikes have yet to feed through to the economy, and the argument really is you can't talk about a 2-year lag in monetary transmission and then get impatient after 1 year.
Okay. I mean, how much time does she want to sit on this, though? I guess is a question for the doves when you look at the inflation prints out of the UK. I mean, she's losing the argument at this point, isn't she?
Clearly, because we've just hiked by 50 basis points and she's leaving the committee. She's going to we expect to be replaced by Megan Green, who's a bit more hawkish, it seems. However, her point stands that we haven't yet had the full 18 months to 2 years of lag.
And the link, of course, from the higher rates to the mortgages, and we had the nationwide prices out today.
Yes, not as dire as expected. In fact, house prices relatively stable in June. Economists had expected a drop on an annual basis, staying in negative territory, but falling less than expected as well. That said, Bloomberg Economics reckons that this is just the calm before the storm. So we had mortgage approvals data from the Bank of England yesterday. Yes, there was a larger than expected rise in mortgage approvals, but you did see that households were paying down their mortgages to get ahead of these rate hikes.
Yeah, really interesting. I spoke to the CEO of NatWest earlier on this week, Alison Rose, and she was saying that the deal that people are doing right now is trying to get onto a 5-year fix. So if they're rolling off their mortgages, they're putting a premium on certainty, even if we are, we might see rate cuts within that time horizon, might we? But that is what people want right now. They want a fix. They want certainty.